Now, the Nigerian economy has recovered from a recession and is showing signs of slow growth, which leaves a lot to be desired. There is no doubt that the resilience of Nigerian economy is being severely tested by the ongoing insecurity-related uncertainties. This, many say, has also been worsened by lack of economic leadership. With Naira now at about 500 Naira to the dollar in the parallel market and the government spending 85 to 90% of its revenue to service debt. Tilewa Adebajo, the CEO, CFG Advisory, believes we need to seek ways to protect the values of assets, protect our businesses, and rethink our economic survival strategies. He joins us next. Keep it here with us. This is Business Morning. Thank you very much, Mr. Adebajo, for joining us on the program. Good morning.
Morning, Chimeze.
Well, Larry Summers, the renowned economist and former U.S. Treasury Secretary, once said, deflation and secular stagnation are the major risks of our time. And when you think about this statement, which was made many years ago, where do you situate the Nigerian economy in the conventional economic business cycle of boom to slow down to recession and recovery?
Well, I mean, clearly we have come out of the recession, but the growth of the economy is very weak, extremely weak, as a matter of fact. The economy grew only 0.5% this quarter. So obviously there are green shoots and we're looking towards a recovery. But unfortunately, we found ourselves in a situation of stagflation, which is a very tough cycle in terms of which is characterized by low economic growth at 0.5% when our population is growing at 3.5%. We have unemployment and underemployment close to over 50%. And of course, you have runaway inflation, which stabilized in March. So when you have these three characteristics in an economy, it's important that you use supply side restructuring, structural reforms to be able to get your economy back on a sustained period of growth. The Nigerian economy needs to grow between 6.5 to 7.5% for us to lift everybody out of poverty and have sustainable growth and wealth in this country. That is the target. So at 0.5, we're quite far away from it.
Just as you said, the first quarter GDP showed a very tepid and anemic growth rate of about 0.5%. This is 1.36% lower than the first quarter 2020. Now, a lot of people are celebrating the exit from recession. And you have said that Nigeria has moved into stagflation. And you also talked about using the supply side to reignite the economy. Can you expatiate on this? I mean, your recommendation, in the short to medium term to really jumpstart the economy and get it back to the path of accelerated, inclusive, and sustainability growth.
Thank you very much. First of all, it's important to realize that monetary policy has reached its limits. And I think that right now the central bank has done all it's supposed to do and more, plus a lot more, especially with the intervention funds to be able to sustain economic growth and sustain this economy. The challenge we have right now is on the fiscal side. There's quite a few significant fiscal indiscipline. As you see, we're using 80 to 90% of our debt. 80 to 90% of our revenues is going towards debt service. Now, clearly that is not sustainable and shows signs that as we speak today, Nigeria is insolvent. So when you have an insolvent fiscal regime, you're going to put significant amount of pressures on the economy. You need to get out of this vicious cycle. You cannot continue to borrow to fund your budget deficit, i.e., in terms of Nigerian parlance, you cannot begin to borrow to pay salaries and your running operations. It is not a sustainable situation. We have challenges with the Fiscal Responsibility Act, which this current regime is in violation of, and I think we need to correct that. And in order to put these challenges into perspective, for instance, I don't like comparisons, but the United States government, its debt to GDP ratio is 101%. but it only uses 8% of its revenues to service its debt. In Nigeria, our debt to GDP ratio is under 40%, but we're using 80 to 90% of our revenues to service debt. This is where the challenge is. So there's a need for these structural reforms, i.e., you need to remove the subsidy, you need to begin to start privatization. The concessions for the airports is welcome, and I think a lot more needs to be done. The transmission company and many other viable assets that are seen bankable that government does not need to run, because government needs these revenues to be able to sustain it. And as you know, the NNPC has said it can no longer continue to fund the Federation account on a sustainable basis in the next 3 to 4 months because of the payment of fuel subsidies.
Now, the federal government, you're talking about debt sustainability. The federal government, of course, is about to raise about $3 billion in the Eurobond market. The total external debt of Nigeria could be approaching $38 billion, rising from $10 billion since 2015. Now, with the rise in U.S. inflation now at 4.2%, the probability of an increase in U.S. interest rate is now almost imminent. What would be the implication of this?
Well, the direct implication is the fact that, as you know, we're struggling right now using 80 to 90% of our revenues to service debt. If the interest rates go up abroad, then that figure will probably exceed 100%. Our debt profile, as you've seen, foreign debt profile under this regime has tripled from 9 trillion to now going to approaching 40 billion. Don't forget that apart from the 3 billion that you're talking about that is now recently approved on the Eurobond, we had an additional 3.5 billion that was earlier approved, 2.5 and 1.5. So if you add that together with this 3 billion, our debt profile is now sitting at about 115 to 120 billion US dollars. So clearly our debt profile has exceeded $100 billion, and that is a red flag.
Now, what domestic and external debt strategy should be adopted to confront the stagflation saga?
Well, like we've said, with the removal of subsidies, then the Oronsoye report, I think that report should be reviewed. It should be updated and implemented. If you remove the subsidies, you implement the Oronsoye report, you begin to privatize and concession a lot of assets that you're normally putting money into, then what that does is that it frees up revenues for government, not only for it to use to run government, but also begin to invest in social infrastructure that will create the enabling environment to be able to reflect the economy and encourage growth. So a lot of the policies that have been put into place, the National Economic Recovery Plan, the new plan, which is the Growth, Poverty Reduction with Growth Strategy, I think these plans need to be realigned and implemented because these are laudable policies. And if they're implemented, then we can now begin to see that growth once you remove a lot of all these structural hindrances within the economy to free up revenues for government. The question we've always had now is the political will there to make these hard choices, because it's time that we swallow the bitter pill. If you have malaria, you're going to have to take a bitter pill to get better. And that is the situation we find ourselves.
Absolutely. Well, inflation slipped marginally from 18.17% to 18.12% in April. Anecdotal evidence seems to suggest that consumer price inflation could be higher than the published numbers. So how much do we expect inflation to increase in the next quarter, especially with the effect of the now exchange rate policy, with a sharp depreciation of the currency in the parallel market and the current level of rationing of forex in the market?
Well, at least with the foreign exchange mechanism, I think we've all been talking about this single window. And I think that the central bank has now moved to that single window. So I believe that since we have a single market-driven mechanism, that market will eventually settle because we do have transparency there. So I think the central bank, it's taking them 2 to 3 years, but they have at least now we have a single window. So I think that market will stabilize going forward. And also, we now have the non-deliverable forwards, which will be able to remove any speculation in that market. So I think that foreign exchange mechanism is under control. So I think the central bank has done what they need to do in that area. On the other side, which is what you're looking at with the government, what is putting pressure, the additional situation that is putting pressure on inflation is the ways and means financing. According to the Debt Management Office, we have close to 10 trillion naira or $25 billion of ways and means financing on the central bank books that needs to be refinanced into the capital markets. What the Debt Management Office said is that the central bank had been using ways and means to finance the budget deficit since 2015. And the rules say that you must not use more than 5% of the previous year's revenue, and that funds must be paid back in the year on the period. At a point in time, the central bank went as high as 80% of the previous year's revenue in terms of funding ways and means. So it's important that this $25 billion or 10 trillion naira is accounted for and put into perspective on the debt profile so that it does not increase the inflationary pressure on the system, because it can lead to a lot of macroeconomic risks within the financial system. So once we account for that and we resolve that by refinancing, then we can begin to take a look at the issue of the cost push inflation with the food prices and the might increase suggested the impact of the increased fuel prices on the system. But I think it's something that is under control. Inflation reached 18% 4 or 5 years ago, record high, and the central bank did put in policies to bring it down to 11. So I think they should use the same formula and those same mechanisms by reducing the ways and means to bring inflation under control.
Now, but with the insecurity situation in the country heightening right now, where do you now see inflation and where do you see the general economy going forward?
Well, as you said in the beginning, the insecurity is beginning to test the resilience of the Nigerian economy in ways beyond our expectations. And I think that the whole essence of the logistics of even moving things from across the country, especially since the food basket is within the areas whereby there's a lot of insurgency and a lot of instability and security problems. So the logistics of moving produce out of that into the urban areas is becoming quite challenging. And that is being reflected in the food prices we're seeing in the urban centers. So without a doubt, it's testing the resilience of the economy, and it's going to test and it's going to hinder the recovery of the growth of the Nigerian economy. So it's important that we put this security situation under control, especially with the uncertainty also, which is leading people to speculate and trying to shift their assets, and the demand for foreign currency is a lot higher. So it's not just the fact that people are looking for foreign currency to import goods, but they're also looking for foreign currency as a store of value because everybody is quite on edge as to what the future holds. And when you have that sort of situation that you don't have confidence in the future, it's difficult to restore growth in an economy.
Thank you very much, Mr. Adebajo, for your time this morning with us. Tilewa Adebajo is the CEO, CFG Advisory